All right, hi guys, hi traders. Welcome back to our weekly trading forecast for the month of 15th of June to 19th of June. So my name is Dylan. Over here, I have JJ with me. All right, so as usual, we are going to kick off with the dollar index. So let me just share my screen right now. All right, so as you can see right here is dollar index in the day chart. So if you look at the day chart itself, we found that the dollar was actually breaking new low in the beginning of the week. So you can see it actually fell from somewhere about 96.8 all the way to the lowest at about 95.7 to 95.8 region. And right here, you can see that there is strong demand. Basically, price has entered into a demand zone at the bottom. And based on the formation right here, we can also see that the dollar index has completed a second major wave of a pullback. All right, so the entire volume is pretty much the same as the very first wave that came down when dollar reaches the highest at about 103. So that actually shows us that the downtrend as of now is over, and therefore there's a very good chance that the dollar index in this week or in the coming few weeks is going to continue to climb. So let's take a look at the 4-hourly charts as well. So in the 4-hourly charts, as you can see, I have some moving averages here. And one thing is that the price has broke above the 20 and the 50 moving average. So that shows that the current downtrend, the current falling structure has been broken. And if I were to plot a put out a trend line itself, it has been broken very obviously as well. The entire bullish wave has already came out in a very nice way, and right now we are seeing the price has started to pull back. So in this case, we can start to look for an opportunity to buy, and of course in the 4-hourly chart as well, you can see that right now there is there's a possibility it may form a inverse head and shoulder. So this is what I mean. Let me just plot the chart for you. All right, so it came all the way down, pulls back a little bit, forms the head. Right now it's forming the right shoulder. So if it came down to somewhere at this region, we can probably look to buy the dollar index. All right, because number one, since we have confirmed that the price has reversed, the bullish trend has already started to form. We are waiting for the pullback, and right here at this region, definitely is a demand zone that we want to look out for to buy the dollar index again. All right, so this is the first level to watch out for, and of course we do not exclude the possibility it may go down a little bit further, back to this region at the bottom, to find demand and for the price to continue to go up further. So it depends, but I think there's a good chance that the price can rebound as it pulls back to 96.9 to 96.7 region. Okay, so that is for dollar index. And if we are looking at the upside targets, I think for the first one, definitely we want to look at the supply zone at the top right here. Okay, to be more precise, is somewhere in between 97.5 to 97.7. And if it's able to break higher, then we can look at the day charts. So if you look at the day charts, previously this was the symmetrical triangle, and the price broke somewhere right here. And you can see based on the formation of the candlestick, this region right here is definitely a very strong supply zone. So this is the final target I'll be looking at if I were to buy the dollar index. All right, so that's pretty much for the dollar index. And next, I want to talk about the Dow Jones. Okay, as we know, last week after the FOMC statement, after Powell has spoken, two things to take note is that the Federal Reserve is going to keep rates unchanged and low all the way through 2022. So that essentially itself is actually saying that the economy is going to take a long time for it to recover. So the economy itself is going to continue to struggle for quite a good period of time. that in itself is already bad news for the stock market. And secondly, the government is still going to continue to uh, 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 continue with its bond purchase program, such as the treasury purchases of 80 billion and 40 billion dollars for the MBS mortgage-backed securities. So in short, they're still going to continue to print a lot of money to help support the economy, support businesses to go through this COVID scenario that we have right now. So we can see that the Dow Jones came down a lot. Okay, it reaches the highest at somewhere about 27,600, and that's where it started to found resistance. In fact, it's actually at the top of a rising wedge as well. So the price got resisted at the top, started to come down before FOMC, and during FOMC itself, we saw the price started to come down really fast on the next day. So this looks really, or rather, it really resembles what happened back in mid-February or late February when the price of Dow Jones actually started to, came crashing down. So I believe that Dow Jones will still be able to continue to fall in this week. So this week there's two possibilities. Number one, I think it can continue to pull back and but more in a ranging manner. Okay, and the second scenario is that it may just continue to go down. I doubt it can resume its bullish trend as of now, because if you just take a look, okay, I'm going to quickly show you. If you just take a look at the VIX index, the VIX index that measures how the market is feeling, how risky the market is actually feeling right now, or in other words, risk sentiment, it has shot up. Okay, from it came down all the way like this. You can see there's a curve coming down, looking good. Okay, found some support at 22.24 region, and then after the FOMC itself on Thursday, it actually shoot all the way up. So this there's a sudden surge of a strong risk off. So I think that's going to weigh on the US stock markets or the global stock market itself, and that is definitely going to push the price lower in the coming weeks or even months. So coming back to Dow Jones, in terms of the trading plan, let's take a look at 4-hourly chart. You can see that on last Friday, price actually tried to came down again. It pulls back and came down again, but it still found some support right here at 25,200 region. Then after which but anyway, if you look at the pullback itself, the pullback did not went all the way up back into the rising wedge, and in fact it got resisted by it. So like I say, the first scenario is that it might continue to range, so it may actually goes up, pulls back a little bit more, okay, back to this level, okay, at about 26,100. I think this is where we can really try to sell again, but there's also a very good chance that when the market open in the coming Monday, it may just start to fall. So I think we just have to observe first. Okay, if let's say the price doesn't go up anymore in the beginning of the week, we can actually try to sell as of the current price, or if not, we just want to wait patiently, okay, for it to retest the high and the region right here at 26,100. In terms of the target itself, I'm looking at back then, when the price started to recover, when the US market, stock market started to recover, it actually went into a range between early April to the end of May. So this is where this is the range itself, as you can see, and this is where the price broke above. So the first target I'll be looking at is back to the top of the previous range right here, and if the price is able to continue to go down, the stock market continue to came crashing down, I will be looking at the final level right here in this supply zone, demand zone. So that's between the price of 23.4 thousand to about 23,000 itself. So that is for the Dow Jones. Right, so right now I'm going to pass my time over to JJ to share his trading plan for this week. So JJ.
First, we have dollar CAD. As we can see, dollar CAD found support at a previous breakout of a channel. And after finding support at this level, it broke above this supply zone. And before the market closed, we can see that it has retested and found support again. So we can see here it formed the double bottom before shooting up and finding support. So this week, as we can see in the 4-hourly candle, we could look to buy the dollar CAD with next immediate resistance being this range here, which could be a supply zone. So firstly, we could either wait for, if we see this as a wave, we could look for a second wave down before buying dollar CAD. And yeah, as I said, the first resistance will be this zone, and if it does break above, the next strong resistance would be where dollar CAD was undergoing a major consolidation range here. And next would be pound dollar. Similarly, pound dollar found resistance at this supply zone before coming down, and we can see in the 4-hourly candle, this was a previous channel. So after finding resistance here, it shot back down and to the bottom of this channel again. So for this week, we could look wait like maybe price to go back up to the top of this channel, which is also a supply zone. As we can see, there are multiple points of resistance here. If price reaches back to this zone, we could look to sell the pound dollar and to the next levels of support, which is also, this would be the neckline of the head and shoulder, and this would be a demand zone. As we can see, there are multiple, when price reach this level, it's quite an obvious area of interest. So this will be my two analysis for this week.
All right, thank you, JJ, for your sharing. I think that's very good. Especially, I think I like dollar CAD a lot. The break is very obvious. Trend is the new trend that's forming right now is very clear as well. Waiting for the second pullback to buy. That's definitely a very good plan. Which I think as traders we should always look for pullback to find a good price to enter. Right, so our risk is smaller. Our reward can be bigger as well. All right, so right here I'm going to share my screen again. All right, so next up, I have the euro dollar. So this is the weekly charts. So you can see that for the past few weeks, euro dollar has been really strong. It came back from the bottom at about 1.07 region, and it shot all the way up back to a very strong resistance zone right here, which is between 1.136 and 1.147. This is a very strong supply zone, and we can see last week it formed a very obvious reversal candle, right? Inverse head and shoulder hammer, or whatever you call it. Okay, obviously there's very strong selling right here, or in fact there's very large take profit. Therefore, it causes price to reverse and started to fall. So in the day chart itself, all right, we can see that this entire rising structure, all right, has been broken. It first broke in the second trading day of last week, and it pulls back higher and started to fall really fast. And if we look at the 4-hourly charts, so this is this was the support that it found after it actually break the trend line, and right now we have seen the price has already broke below as well, and the price closes below, and it started to pull back, but it still got resisted at this support term resistance level at about 1.1260. So definitely a very strong sign that euro dollar is going to go down further. And of course, we know that the dollar is rebounding strongly as well, so that definitely supports the fact that euro dollar may continue to fall. So right here, what we can do is simply plot a falling trend line, right? So connecting the two highs right here. Okay, right. We can definitely look at this level with a pullback. Okay, back to this trend line, and somewhere at this region, we can see that it's a supply zone. So we can actually try to look to sell at about 1.1287 all the way to 1.13 to look for opportunity to sell at this price. And if not, if the price were to pull back even more, then I think it's very obvious that this is the range, and this is where the price broke below the range. That is 1.1336, a very strong level for us to look for resistance to sell the euro dollar again. Right, so either it's at this level or at the earlier level with the falling trend line right here in the 1 hourly charts. So in terms of the targets, of course, I think the first one that we can look at, okay, is back to somewhere its previous low. Right here, because right here there's a very strong support. We can see that this is the region, or rather this is the price where the price rebounded off strongly, break new high. You can see a very strong bullish candle right here. So definitely this definitely provide us with good support as well. So there's a first level at 1.12 flat. If the price were to go even lower, all right, then we have to go into the day charts and the day charts. So if you look at the day charts, two levels, okay, very important. Number one is the previous high right here. All right, because this was a pretty strong resistance previously, you can see the price touches this resistance level previously at 1.1143, pulls back, okay, and on the second day it tested again, and then after that, it started to break. So this is an important breakout level to watch out. So therefore, this becomes second level. I'll be looking to take profit. And last but not least is this resistance right here. So again, obviously a very strong resistance at 1.09. Or we can actually move it, shift it a little bit. That will make it 1.10. So this will be the final level. Okay, I'll be looking to actually for if I were to sell as the final take profit level. I mean, if I were to pull a Fibonacci, this is just right above the 61.8%. Okay, so that's for the euro dollar. And for the gold, okay, for the gold itself, this week I am going to observe a little bit. To be honest, when risk sentiment actually increased, the bids actually jump up and surge. And when the market is feeling risky, safe haven assets such, or rather currency, such as the gold, dollar, and Japanese yen should increase in demand. So for dollar itself, yes, it's going up, and gold is going up as well, but you can see it's pretty subdued in a way because dollar is also appreciating. If you look at dollar, if you look at the yen pairs, then I think it's very obvious yen is actually pretty strong. Okay, so you see for dollar yen, it actually came down all the way until the very last day. It found support and started to pull back a little bit. So that definitely proves that the market is feeling very risky right now. Safe haven asset is in demand. Back to the gold itself, we can see that the gold in the day chart is obviously that it is still trading within a very huge range right here, okay, between the price of 1,677 to 1,746. So right now, the price, although it has rebounded off pretty strongly, but it's only back to the top of the range, still being resisted at the previous high or the previous resistance at 1,741. And on the very last day, okay, it tested again, but failed to break, and it pulls back, forming leaving a very long upper shadow. So there is a good chance that the price may continue to fall again. So therefore, in this week, short-term wise, yes, you can try to look for opportunity to sell, and especially if you look at the 4-hourly chart as well, you can see that this trend line, this rising trend line, has been broken on the very last day, or in fact, in the last 2 to 3 hours before the market actually closes. So that itself is actually telling us that the gold may continue to pull back lower in the coming weeks. So yes, definitely there's an opportunity to actually sell the gold. But if not, we want to wait for the price to trade lower and to see if there's an opportunity to buy the gold again. And I think this for this portion we will probably talk about it in the later week. So that's for the gold. And last but not least, I just want to share about Kiwi dollar, because Kiwi dollar right here, that is actually a very good opportunity to sell. In fact, I have a student that actually shorted Kiwi dollar somewhere at its highest, and this is a weekly chart. You can see that right now, based on the weekly chart, this falling trend line right here, we saw that the price has been resisted very well at this falling trend line in the weekly charts. And if you go to the daily chart itself, previously this was the downtrend. Okay, it shoot all the way down, started to pull back. This is the first wave, and if I copy, if I just copy this wave back to this region itself, you can see it has actually completed the second wave of a pullback just nicely, and right now it found resistance at the top right here. This is a very good structure that tells us that the price will be going down even more. I always try to look for this formation itself, a bearish candle, okay, followed by a small bodied bullish or bearish candle as well, and then followed by a very strong bearish candle right here. And that is definitely telling me that you will go down even further. And in the 4-hourly charts, I mean, obviously, if you plot a rising trend line, it has been broken. And right here, in the 1-hourly chart. So what is the plan? The plan is to sell, and where do we want to sell? Either because right now the market has already pulled back once, okay, based on this previous falling trend. It came down here and it started to pull back again. So the first level I will be looking to sell again is as it pulls back again back to this region, a support term resistance level. In fact, you can even see this as a double top. So it actually came down, broke the net line, pulls back once, pulls back twice, back to the net line. If it got resisted, we can continue to sell. But if let's say the price were to broke above this level, then obviously we can look for harmonic pattern, which is one of it that I like to use the most is the bearish bat pattern. So all the way back to 88.6% of SA, that would bring us back to the supply zone right here at the top. So that will be about 65, 0.6560. So that is the final level I'll be looking to sell. And of course, if price continue to break higher, then that's it for this. I mean, Kiwi dollar is going to go up even more. But as we see right now, based on the market sentiment, I think it is hard for commodity currencies such as Kiwi or Aussie to continue to rise. As risk sentiment started to re-emerge again. All right, so this is for the Kiwi dollar, and with that, that is all for today weekly trading forecast. So thank you for watching, and we will see you again next week.